Hi again, I'm Greg Newman, CEO of Honest Capital Group. So we talked the other day on a video about an airline example, or an airline hedging example, where the trader or the executing hedger went into the market to hedge and only hedged half, and then the rest of the hedge they actually let run because they didn't have a plan, and the price got more and more away from them, and then it led to indecision. So this is a very common thing that happens with the psychology of hedgers, but actually it happens with all traders, and it does show why execution is so important, and about mastering yourself is really important. So this is particularly topical for me and in my career as I started on in the early days in particular. I read a book called What I Learned Losing $1 Million, and in this book, after a series of funny stories and theories, etc., it started to talk about the 5 stages of loss and how that can come into your trading, and actually happens around 50 times a day if you're trading enough. And it's really important to go from the kind of early stages all the way to acceptance as quick as possible. But just using the context of the example, or just in general, I'm kind of going to go through the kind of key signs that you see with these stages, how they relate to the market, and how they can lead to a spiraling. So the first one we'd say is denial. So, using the previous example, we didn't hedge and the price started to get away from them. The first thing is they're not spotting that this is going against them. They're not spotting that this is a real issue. And this is quite classic, right? You don't accept that you've done anything wrong. You don't accept that you didn't have a plan. So you just think, you kind of just don't even notice it. And if someone asks you, say, yeah, it's just short-term volatility. It's kind of not a problem. And you're not even aware of the impending danger and the signals the market's trying to give you. So then it goes on to we've got anger. So this one it's very common, particularly in my trading, in my days. You kind of think this is getting really frustrating because suddenly I am getting signals that it is getting kind of obvious. And the first thing you're going to say to yourself, or common things you hear said, are, the market's so stupid, why is everyone doing this? This is just crap. And again, you kind of mixture of denial and anger. You say it's going to come back, but they're so stupid, why would they do that? And when you hear those kind of things, it's irrationality, and you're acting with emotion, and immediately you're getting into the kind of psychology that can be quite damaging. And at this point, you can start to make decisions that actually can be really compound the error and make it even worse. Like, for instance, I have seen cases of someone being, for instance, long and losing or short and losing, and they actually double down as a kind of act of defiance, and that's how it can get really dangerous. After that, it continues to happen when you see the bargaining phase. The bargaining phase, you say, look, if it just goes back up in my favour, if it just goes down a little bit in the Brent example we gave at the beginning, then I'll buy back. And of course, that's just crossing your fingers and hoping. And at that point, it's going past irrationality. It's just blind faith, which I think no one can argue that that's a good trading strategy. And at that point, I think it's particularly damaging for the management, because they're not even aware they've got someone managing their book that's actually kind of checked out. They're kind of not only don't have a plan, but they aren't really thinking and engaging how they should be in order to execute the hedge or essentially manage the cash flows. So after that point, we kind of get into depression, and this is obviously one of the more damaging ones, because at this point you have really given up, and you're saying you're going to see the head kind of falling down. Whereas bargaining, you might have seen a bit more like wide eyes and rabbit in the headlights. And depression, you start to see the head go down. In the worst case scenario, you might see someone just leave the desk and just say, "Oh, I don't want anything to do with it." And of course, that's why monitoring is so important, because again, if someone was to leave and just check out, you're still exposed, and there's no one managing. So that's obviously a very dangerous phase. The next bit, it would be acceptance. If you can get yourself to acceptance as clear as possible, you can get through these phases and identify them and go, right, I know what's going on, this is classic psychology going against me. I'm going to really address how I can accept what's going on and move on. And that's why a stop, or a plan to have a stop, or a plan of what to do in a bad scenario is always going to be beneficial, because it's going to stop you from having to think too much. You say, if this happens, and if it's an arbitrary thing like just a price, I'm going to assume that all my kind of interpretation of the market is wrong, all my kind of feeling and intuition is just not working. I just need to accept it, I need to stop out, or I need to just buy what I said I was going to buy and move on. That's the healthiest thing you can do. And the weirdest thing about it is, once you do it, once you stop out, once you have this acceptance, actually it's a great relief, and you only notice then that you had all this built up tension, and you can start to think clearly again, and you start to realise, God, I was acting really irrationally. But again, if you don't have the kind of interpretation or the understanding of yourself and even other people, of what it looks like to go through these phases, you might not even be just convinced of what you're saying is correct, but really it's just a very classic psychological bias that's going against you. So went through this a lot in my early trading career, and reading a book called What I Learned Losing $1 Million was actually the book that really broke this down in a really clear and entertaining way, actually. And I really advise it as a book, and I tell everyone on the trading floor to do it too. And again, it's not something that you can ever 100% master. We are human, and it is always going to happen, but it's good to know thyself, read and try and learn as much as you can so you can identify these things and cut them out as soon as possible. It all comes back to having a clear plan of execution. If you know what you're going to do in the worst case scenarios, then ultimately you will be better prepared. Thanks for listening.